Let's welcome in our next guest, talking more about the market and when we could see a bounce back. The low on the S&P 500 today is 55.28, but tech has been beaten down, and Ken Mahoney seems some opportunity. Ken Mahoney, CEO of Mahoney Asset Management. Thanks for being here with us. So,
Yes.
you know, we wake up and sometimes we see some up arrows in the morning and then they're gone. Some of your thoughts on what's going on here?
Well, those up arrows, I feel like we're in this movie Groundhog Day, a funny movie with Bill Murray, but not so funny as an investor, that overnight you wake up hundreds of points. You saw those little arrows, as you mentioned, Nicole. By 10 a.m., something hits. We get a little green on the screen. That looks like, oh, maybe we get out of this pickle. And only to sell off in the afternoon. And the psychosis, wake up the next morning with, I got you, babe, I share. So this is what we're going through. It's all around the tariffs, and I think the Fed. I think really Trump overplayed his hand here. I mean, look, we all want a deal, also, but I mean, look how much uncertainty has now taken place in the market, and I'm not sure that's a fair trade to take, a couple billions from Canada for tariffs versus the trillions of dollars lost in market capitalization. So, these algorithms, Nicole, as you know, they feed off these headlines about tariffs, and here we are. Now, again, our opportunities our opportunity as an investor is when we have these, kind of forest fires to go picking most of the rubble. But, we have to understand where it came from, where it stemmed. We're cruising along pretty good. And this, kind of doubling down and quadruple down on tariffs is not a good look. It's not working. And it's scaring a lot of investors.
And look, even today, right? So we just got the headlines short time ago that the Ukraine was ready to move forward with peace and work with the United States. And now they're saying that they hope Russia now is ready to do so as well. And the market came up off the low. In fact, jumped about, has been moving higher by about 50 points, now 60 points up off the low. Could that have been the bottom today?
Again, it's always hard to know. One thing that we key on, and we ask your viewers to take a look at too, is the volatility index, known as the VIX. Sitting here at 28 is not a good position for investing. Again, I long for the days like in 21 we were like 12, 14. Before this whole mess started, the volatility index was like 15 or 16. My point is, I like to see that come in a little bit and give us more confidence. But there's nothing wrong with double, kind of dollar cost averaging a little bit here. Finding your best names, and whether we have a bottom in or not, it's hard to know. It probably doesn't feel like this. I feel like we need some capitulation, Nicole. It's kind of like, it's almost like a steady decline and everybody's kind of used to it. I think we need like a big washout, and I'd be more comfortable to kind of say, okay, that seems like someone's waving the white flag. That feels like a capitulation. So I'm not sure we're there yet, but also I'd like to see the VIX come lower. But there's also nothing wrong with kind of dollar cost averaging on your favorite ETF, stock, fund, whatever it is of your choosing.
Right. I mean, I'm certainly not playing devil's advocate like yesterday was it. Capitulation where you have that panic mode and some real big moves. And I mean, the VIX at one point was up over 25% yesterday. You had a name like Tesla down 15%, MicroStrategy was down 16%, Microchip, Palantir down 10% each. So it was kind of a monumental day yesterday. That does not mean that was it, but it did feel like it was enough that people started calling me, and they haven't been calling me with the worries. It was enough to say, gee, when does this end? Why is this the worst month since 2022? In the meantime, when it's going to bounce back, and you're saying dollar cost averaging, you said you better be in there. So Apple, Microsoft, NVIDIA, these are your picks. Should we start buying them today and buy a little each day? Is this going to be the tech bounce back?
I think it will. Look, I know they have not been leaders in some time, but when you come through this forest fire and everything is upside down, money doesn't jump into small caps or international or some of those areas. It goes to the most liquid names, the names that we know have good earnings, have good balance sheets, that are buying back stock. That brings us to those stocks. NVIDIA, Microsoft, and Apple have quite a bit of market cap with the NASDAQ and the S&P 500. So I think, when people start like kind of picking at things, they want to pick at things that they know the company, they know that the stock's taking a hit, but they also know there's a lot of liquidity. So for some reason, big institutions jump in and the market doesn't follow through. They know there's a bid there, they could jump out. That's not true with small cap and some other type of investments, coming out of this malaise.
Asserting that the recent market decline is transitory and that industry leaders may set new records in the second half of 2025, Wedbush analysts remain optimistic about AI-driven tech companies. The company recommends NVIDIA, Apple, Tesla, Microsoft, and Palantir as its top stocks for navigating the turbulence. Wedbush analyst Daniel Ives wrote in a client note that investor concerns about tariffs, recession risks, and slowing tech growth had caused a sell-off following a historic AI-driven bull market. NVIDIA is down 20%, Apple is down 11%, and Tesla is down 44% so far in 2025. While Palantir has remained stable with a 1% gain, Microsoft is down 9%. Ives remained optimistic about long-term returns, stating that these picks represent investments for the next 1, 3, and 5 years, even if he acknowledged that some of Wedbush's bullish calls had been off this year. As soon as policy concerns subside, he views the current market decline as a fantastic opportunity. In a recent appearance on CNBC, Tom Lee of Fundstrat stated that he remains hopeful about the stock market in spite of recent sell-offs. Here are some of the arguments he gave for his reasoning. Why investors are sitting on their hands makes sense to me. They truly have no idea how bad these tariffs will be or how long they will stay, after all. The market is actually up, so we're rising on bad news, which is a good sign that a lot of bad news is already priced in. Lee discussed the significance of being invested during the best days, and he thinks the market is nearing a near-term bottom. In my mind, we put out a piece yesterday just talking about the 10 best days that happen every year. Last year, for example, the 10 best days added up to 21 percentage points of the S&P. The market was only up 4% in the absence of those 10 days. However, we're seeing a significant price correction and a decline in sentiment at the moment. It's only the 10 best days of the year, so you don't get 20% years because it's fantastic all year round. I believe that a 10 best day is imminent because if the economy is operating at stall speed, people will understand that Trump's policies are working because, if they are not, all of this austerity will have to be reversed. Additionally, because the Fed doesn't want to deal with stall speed, it re-enters the market if the labor market is weak. That, in my opinion, will be the motivating factor over the coming weeks. Furthermore, we already know that equities will decline before negative news surges. Therefore, if the market is not declining in response to negative news, it indicates that we have already factored in many of the factors that would typically make us nervous. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
And do you like all three of them equally? Apple, Microsoft, and NVIDIA?
It's close. I would say I like NVIDIA the best. The forward-looking PE, again, we don't use PEs, that's rear view mirror looking, but the forward PE for NVIDIA is 25. Historically, it's like 35 to 40, meaning that the earnings are going up and the stock price is going down. So that's kind of the pick of the litter. Apple today is having a very difficult day, obviously. Again, you have 2.4 billion users. You know, you can really monetize 2.4 billion devices.
In a recent CNBC program, Chris Caso, a senior analyst at Wolfe Research, stated that, although NVIDIA's quarterly performance was not as strong as it once was, the business can still expect further growth in the future due to a possible rise in compute demand. The shift to reasoning models, where the AI truly thinks for itself, is one of the intriguing aspects of DeepSeek that Jensen mentioned in your comment. Although it lacks the answer directly, it may determine it by following a few steps. They said that inference actually requires 10 times as much computing power as running the models, and it seems that this will also be a contributing factor. According to Caso, his price target of $180 for NVIDIA accounts for the potential sales slowdown the firm may see in the upcoming quarters. It's a significant gain, and even that only accounts for a slight slowdown in revenue growth, which should be in the 30s next year. So, and that's what makes investing in NVIDIA so alluring at the moment. You're not seeing a bubble value, but rather a really fair valuation for a business that has been expanding rapidly. The market will continue to penalize NVIDIA for failing to meet its enormous and occasionally irrational growth projections. Large cloud providers, who account for around half of the company's revenue, are reconsidering their strategies in light of DeepSeek's launch and searching for less expensive chips. Compared to its prior 12% QoQ growth, NVIDIA's Q1 projection indicates a 9.4% QoQ sales growth. It is anticipated that its adjusted margin will also decline significantly to 71%. When NVIDIA doesn't report a solid quarterly beat, the market does not like it. When the company reports poor growth in the upcoming quarters, the stock will continue to be under pressure. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Welcome back to Market on Close. Stocks are trying to hold something together here. Big tech still has a couple big winners, but the market is off the highs. Kevin Green going to take a look at the session for us. KG, can we do it?
Yeah, hopefully. I mean, if we can even just pen here at 5,600, I think that would be, for the most part, a win. We would still be, for the most part, down for the session, but it would be a decent advance from the lows that we had early on here today. What I am getting a little concerned about, which we always should get concerned about, especially on market days like today, is the concentration risk in Mag 7 tech, as well as those long call buyers that kind of gotten into the market pretty much around those lows that start to actually unwind some of their positionings. You're seeing a little bit of a drop when it comes to volatility. Nothing that's too crazy, if you will, right? And I actually have it highlighted here. So this is actually taking 2 days, not just today's price action. It's also yesterday's price action. And the reason why I brought that up, you can kind of see where we have a resistance level sitting at around 56.30 here. We tried to pierce that yesterday, and then this morning tested it and then failed. And so it's not a surprise that you're seeing a little bit of an area of resistance here. But we have broken a pretty decent, or considerably decent channel to the downside that we could actually act as an area of support. If we are actually able to break up first area 56.30, 56.35, there's some flows actually going there, going up to 56.50. We do have some pen risk at 5600. I'm kind of leaning more towards we potentially actually fade into the close, Oliver, but I hope that we go green. But at the end of the day, we still have very low liquidity in these markets. If you're looking at the bid-ask sizes on the E-mini S&P 500, you're sitting at like 6 on the bid, 6 on the ask, meaning it doesn't really take much to actually move price around right now. So let's get out of the concentration. The concentration has been working, at least after those lows. I'm looking at the advanced decline stocks on the NYSE versus the S&P 500. You want to see more participants going into the close. That's going to give you enough breadth in this rally to really try to get us higher and hopefully actually have us close at session highs as well as positive on the day. Okay, but we got to get out of the concentration. The concentration is decent for to get off the mat, but we need to have some follow through with some others to participate. And unfortunately, we actually did lose one sector over the last 30 minutes or so. That was in the green and is now in the red, which is communications.
We've only got 9 of 11 right now, discretionary tech, so that's basically the mags. So to your point, those can act as the primer to get the thing going, but you need something more to follow on. So it looks like the advanced decline is a little sluggish compared to the index. My takeaway from today, though, is I think generally more positive because just compared to yesterday, obviously in the previous days, not necessarily more positive than that analysis, but it's the back and forth that we actually have. The fact that we went from the lows of the day to the highs of the day, there are definitely some people getting chopped up bad, and today some of them are bears for sure. And that to me is an opportunity then to maybe try and right the ship, because there were a lot of signs earlier that we were going to break down. Bitcoin was soft, it had come off the highs, we made a new low, and then as soon as we made that low, we ripped right back to the highs. So I'm sure some people got smoked on that, and that's kind of a different situation than what's it's been recently.
It has been. I would say the news flow has been a little bit more positive today as well.
Today too, right? 2 out of 3 headlines positive.
Yeah, Ukraine, Russia, potentially a ceasefire there. Yep. And then the potential rollback. Yeah, I mean, if somebody's trading off jolts today, I don't know. That was a very stale number. I'm going to be like Alex Coffey here. That's a very stale number. That was January's print. Sure. Maybe. And then you also have potentially the rollback of some tariffs. It seems like Quebec's going to be rolling back the electricity tariffs. And then it sounds like President Trump is going to roll back potentially some of the steel tariffs and the metals tariffs. What I will say, I know this is not flows related. The commodity market is not really taking these announcements really that seriously, outside of maybe natural gas, which has kind of been an outlier. So there's still a little bit more of a wait and see there. But you need to have that really good news flow in order to kind of push us higher. If we didn't have the news, what would the market really be today? Probably would be a little bit more to the downside, unfortunately. So decent little bounce here. Hopefully we end up in the green. But Oliver, I coach second grade basketball, right? And if you have an unathletic kid on your team that finally scores a basket, but they score a basket on your own hoop and not the competitor.
Hey, you're giving me PTSD.
Yeah, I mean, you're still
That was
cheering
me.
the kid on, but you're still not making any gains there. Maybe that opens up that child become a LeBron James, but that's kind of how I look at today's market right now. If we do end up in the red
Nice.
for the S&P.
I like that. All right. So they kind of got one little freebie here to see if it turns into anything.
NVIDIA is dealing with a number of issues. One of them is competition. NVIDIA may have less access to these chips as a result of fierce competition from major rivals like Apple, Qualcomm, and AMD for TSMC's 3nm capacity. Why? Because TSMC's 3nm manufacturing nodes are also used by NVIDIA. Other industry titans that are choosing to produce their own processors are also directly competing with NVIDIA. Amazon provides options with its Trainium 2 AI CPUs. The increased processing power and potential cost reductions of Trainium 2 chips may cause AI workloads to move away from NVIDIA's products. According to reports, Apple and Broadcom are collaborating to create an AI server CPU. With the Jaguar Shores GPU process, which will be manufactured on its 18A or 14A node, Intel is also making a strong effort to return to the market. Our relative underperformance in 2024 was primarily caused by our decision to forego investing in NVIDIA. Despite being underweight, the USA, and more especially underweight the Magnificent Seven, the global leader strategy has exceeded its benchmark when ChatGPT unleashed the power of generative artificial intelligence on November 30th, 2022. NVIDIA's individual outperformance nearly exactly matched the benchmark's 2024 underperformance of 2.81%. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.